What do you think investors should be focused on here today as we still have lots of discussions about what the Fed may or may not do? We're getting the Fed minutes, we're getting retail sales, we're watching Russia and Ukraine. Where should our focus be?
Well, first of all, I think it's really important to understand that that what we're seeing right now is really volatility around Fed uncertainty and not necessarily the rate hikes, right? And so the market does not like uncertainty. The Fed has been clear that they're going to take their cues from market data, and so I think until we get kind of details around the pace and the amount of the rate hikes, I think we're going to continue to see this volatility. So a couple of things. So like answering questions like, will the rate hike in March be 25 basis points or 50 basis points? Those are two different numbers. And will the Fed have an emergency meeting to raise rates? So as we continue to find out those details, I think the market is going to be a little bit more comfortable with knowing, no matter what way it goes. So, but the idea here, though, is to keep in mind is, this uncertainty has an expiration date. So at some point this year, we'll know, and it'll become a little bit more settled.
Do you expect the market to be reactive to retail sales here today? And how do we tease out what's actual retail sales growth and what's the result of inflation?
Yeah, I think it is a little bit hard because we are coming off such a low, but we are, and it seems like we're in a super growth mode, but I do expect the market to react at least a little bit to retail sales because listen, consumer spending is 70% of our growth, 70% of GDP. So I really do believe that the market is looking for any kind of indication to see either, relief or things are going well or, things are not. So when you look at how the market has been reacting to the smallest bit of news, I do think that we're going to see a bit of a reaction to retail sales.
As investors are looking to position themselves in their portfolios, maybe they are doing some stock shopping, she tried to say. What should investors be looking for right now as we still have supply chain crunches going forward? Are we looking at inventory levels, healthy margins? What's most important here?
Yeah, so going forward, I think that the best opportunities are going to be in specific stocks within a sector that can deliver revenue or margin growth. And so, one of the areas that typically does really well in rising rate environments are financials. But again, I caution everyone to kind of not paint all sectors with a broad brush. So when you think about this, rising rates really with financials allows these companies to increase their profit margins. And specifically with insurance companies, when you think about what they do, they take their customers' premiums and they invest those premiums in low risk assets. So rising rates kind of translates into higher interest income for them. And when I think about that, there's actually one stock that I really like in this category, and that's Chubb. It's not a company that everybody really talks about, but when you think about really what it is, it's the largest publicly traded property and casualty insurer in the world. It has consistent revenue growth globally, high credit ratings across all the agencies, strong operating cash flow. They did about $8.5 billion for most of 2021. They've increased their dividend consecutively for 28 years, and their current dividend is 1.6% higher than the industry average. So they're in pretty good shape.